Hello and welcome to another episode of Enter the Boardroom with Nurole, the business-oriented podcast that brings the boardroom to your channel of choice. I'm your host, Oliver Cummings, CEO of Nurole, the board-level hiring platform that specializes in the high-value chair, independent director, advisory board member, and trustee placements that drive high-impact boards. Joining us today is Susannah Nicklin, an experienced non-executive director skilled in financial services, social impact, venture capital, private equity, and working with entrepreneurs. In addition to being a non-executive on the boards of Frog Capital, the North American Income Trust, Ecofin Global Utilities and Infrastructure Trust plc, and the Barons Mead Venture Trust, Susannah is chair of the Schroder BSC Social Impact Trust, a joint private impact investment fund managed by Schroders and Big Society Capital to invest in assets that help alleviate some of the UK's most pressing social challenges. In addition, Susannah is an advisor to the Art Club, a startup that provides local workspaces in London. Her previous non-executive roles include sitting on the boards of Pantheon International and the City of London Investment Group, and her executive career spanned Alliance Bernstein, Bridges Ventures, and Goldman Sachs. Susannah's active approach extends far beyond her investment portfolio, as she has participated in 4 marathons, swam in rivers, and even hiked through the Himalayas. Her lifelong passion for literature led her to founding Stanford University's first Soviet-American student magazine and continues to drive her aspirations of publishing her own novel to this day. Susannah, thank you so much for joining us today.
Oh, it's really exciting to be here. Thank you very much.
So I'd love to start with your journey into the boardroom and those golden threads that took you there. Particularly excited today because one of the people I spoke with in preparation for this call who sat on a board with you said she doesn't know her own worth, that a lot of people would benefit from having a Susannah on her board. And they also said that you're all about preparation. And I feel like I can speak from experience. I think you're the first guest where I felt they know more about me than I know about them, because in preparation for this, you listened to our entire podcast series, which is unbelievably impressive. And I wish every board member took that sort of level of diligence to their work. So thank you for that. But your golden threads, tell me, how have you got to where you are today?
Well, first I should say it was an absolute privilege to have a reason to listen to all of your podcasts. I thought your guests had so much to offer, and I found them incredibly interesting, and it was intimidating to follow in their shoes. So thank you for inviting me. My golden threads really started, I'd say, back when I was pretty young, because both of my parents, growing up in sort of rural, small town New England, were very engaged in their community. I observed at the dinner table their conversations about the boards they sat on. These were not big listed company boards, just educational institutions, important local organizations that needed stewardship and guidance. And I think just enjoying those conversations and listening to them talk about the dynamics on the board, listening to them talk about all the, sort of ins and outs of difficult times for small organizations, and strategy and finances and raising capital and managing volunteers and all of those kind of things, were sort of really integral to how I grew up, and kind of always thought I probably would want to contribute and take part in some way, follow in their footsteps, because I really admired what they did. And so it's always in the back of my mind. And then I pursued a career in finance, and for a while, it really didn't think about sitting on boards. Life at Goldman Sachs was pretty intense, and then carried on into later roles that I had that really focused on executive work, and just didn't really think about joining a board until I became involved with the City Women's Network about 10 or so years ago. And we were very active around the time of the Lord Davies Review and the establishment of 30% Club. And it was really, I was running the professional development team, and we were doing a lot of interesting activities and events and coordinating and facilitating some conversations that started making me think about, okay, am I ready to take on a board role now? And I was inspired by other women who were. And at the same time, in my day job, was starting to do some work at Alliance Bernstein with trying to look at how different investors could invest in private equity. historically really defined benefit plans and big institutions were the primary funders of private equity. And it was increasingly becoming of interest to defined contribution programs and other high net worths to look at how private equity could actually be fit into portfolios. So I was really interested in that. And when I discovered that there was something, such a thing as listed private equity, it really was pretty mind-blowing. And I was astonished that it wasn't more widely known and understood. It seemed to me, incredibly valuable asset and an incredibly useful way to democratize private equity and to make accessible the really best GPs and investors in the private market space to anybody, to anyone who could buy a share. And so I got really interested in that and excited about it. And so as with, I think, listening to many other people's stories, it's a combination of serendipity and intentionality. I think the intentionality was at the time I was starting to think, I think I would really like to put my skills and experience to work on a board. And it seems like boards are beginning to be a bit more open to people with different experiences and different backgrounds. And so that was sort of the intentional side of it. And then the serendipity side of it, as there's always a little bit of that, I think. I ended up meeting a few people in the industry and just getting to know listed private equity. And as we were getting to know the space, I became really, impressed by Pantheon and learned through the grapevine that Pantheon was using a search firm to put together a slightly new board, recruiting 2 new directors. And I put my name in the ring through the search process. And fortunately, my skills were really what they needed at the time. So that was how I got my first board role. And as everybody knows, that's the hardest one to get. And I was really, really fortunate because it was a great combination of, I think, not only my sense of a sort of good cultural fit, but I really believed in the product and the company. And then from there, I've built my portfolio from there quite deliberately to represent both public and private markets through that. And it's, again, a lot of it happens, that way. I think the stories other people have told, there's a certain amount of making sure you're ready for the opportunity and being open to it and doing a little bit of homework and legwork to get out there and unearth opportunities that really fit with what you can bring to them.
Why public and private? And how do you think about the differences between those? Because actually you're quite unusual. There are a lot of board members out there who either just are public or are just private. What's led you to splitting yourself across both?
Yeah, great question. I guess it's partly the decade that has just happened where private has become much more public. I think the awareness of private markets over the last decade has just exploded and will continue in that vein. It's still tiny, private markets, when you look at the total value of assets under management and global equity. I think it's about 106 trillion. And I think private markets make up just under 10 trillion. So it's still a small fraction, but it's growing very quickly. And for me, as interested in financial services generally, it sort of has an interest and relevance across all these sort of axes that I am interested in. So from how you reach and distribute financial services to different people, different types of investors, how regulations affect different markets, and just the investing approaches are really different. And I've always in my life been interested in intersections of things, of bringing learnings from one discipline or a domain into others. And so I think that's what's really drawn me to try to straddle those two worlds.
I suppose I've come from more of a private company background, at least as far as my sort of board roles have been. And I've always thought of private company boards as being much more weighted towards the advisory function and less towards the governance function. Whereas, as I've thought about public companies, and when we've taken public companies private as an investor, we tended to clear out the public board members pretty quickly because they tended to be very governance focused and didn't actually add a lot of value in that advisory capacity. Is that a very uncharitable way of looking at it? Or how do you see that dynamic and difference between the value add of those different boards?
Yeah, really interesting. I initially was answering the question around being a public market board investing in public versus private assets. But I think your question is really interesting as well, which is around the nature of a board for a private company versus a public company. And yes, the advisory role is different, fundamentally different. The role of an investment trust director is really ultimately to look after the interests of the shareholders, and with the final switch to pull is firing the manager. And so it's not an advisory. You're actively trying to get out of the way of your manager's investment strategy so that you have the independence to be able to shift or move that mandate to somebody else if they're not performing. So in a private company board, I think that advisory role, that closeness, that being in a way on the same side of the table a bit more, I think really does. And in my experience with ARC and others, you're really holding hands, you're side by side, shoulder to shoulder. You're not monitoring. You're not, as you say, playing a really active governance role. You're making something happen, and you've got, I think, in a way, that level of more detailed. It's still an executive versus non-executive distinction, and that's really important. And I think there can be more blurred lines, which can be complicated there. There's a risk, and sometimes on a public company board, to do that as well, especially if it's a business you know well and have experience in directly as an executive or a business builder. So I think, and even from an investment trust point of view, often investors, people with long investment experience, sit on boards of investment trusts. And so there is a temptation, of course, to overstep and try to have opinions and to sometimes go a little bit too deep in meddling with the investment strategy of the manager. And I think that's a really important line not to cross.
Okay, so that's something I'd love to dig into more deeply. I mean, you built up this deep expertise in investment trust board roles. If you imagine I'm someone who has never sat on an investment, in fact, you don't even need to imagine it, I've never sat on an investment trust board. Clearly, the nature of those board roles is different from, I suppose, a more corporate entity. How do you think about that role?
I'll take a couple seconds just to outline what an investment trust is, in case people listening to this haven't actually invested in investment trusts before or know exactly what they are, because they are somewhat opaque and somewhat niche, even though they've been around for 150 years and they're a significant element of the UK market. And in the US, the closed-end fund market is huge as well. And an investment trust is a listed company that invests in a range of assets. So one of the great things about the investment trust market is the range of asset classes that it encompasses. And actually, its roots are in specialist asset investing, financing US railroads and so on way back. The resurgence of investment trusts over the last 10 years has been dramatic. The market cap has doubled since I became involved 10 years ago. And the breadth of type of assets that are being invested in investment trusts is really, really fascinating, and offers retail investors and other types of investors access to such a range of assets that are not appropriate in many other structures. So that gets to, what is the role of an investment trust director, and the role that I've tried to play and the directors that I've worked with and have really admired. I think there are a few things that are unique about investment trusts that determine what a good board member does. One of the things that makes an investment trust unique from other investment funds or ways of investing is that there is a board of directors, an independent board of directors. And when you invest in an open-ended fund or even, as an LP into an LP structure, you don't often have an independent board of directors looking after your interests. And that's something that I think has underpinned the stability and vitality of this vehicle for the 100 or so years it's been around. The other couple sort of more technical sides to it are that you can gear. So that has led to long-term outperformance of investment trusts over other types of investment products. And over time, equities and other assets typically do go up. That is, if you have enough time, that's what tends to happen. And so gearing over time should, if done sensibly and carefully, can be additive to that. So that's also an advantage of investment trusts. And then that's been very, very important over the last several years in a very low interest rate environment has been the ability to smooth dividends and to pay dividends over time in a progressive way. So those are some of the features that then become fundamental to the considerations of board members. The type of assets, the strategy of the assets, of course, are going to be what they are. And your fundamental responsibility is to make sure that the strategy is being executed as well as it can be by the manager that you appoint. And so the underlying management of the assets isn't something that the board director does, but the board directors need to understand the markets really well that they're investing in so that they can judge whether the manager is doing a good job, whether the manager is taking appropriate risks for the returns that are being delivered, and understanding competition, relative costs and fees, obviously very important. And that's actually been another big theme over the last decade. Investment trust used to be more expensive than funds. And thanks, I suppose, to the competition from ETFs and other products, the investment trust sector has lowered fees. So now the fee differential is less, and that also makes them more interesting. So that's another aspect of the role of the board members is all of that sort of competitive awareness that what you are governing is a product, it is a company, just like any company, it needs to be sold. So along with the investment performance, which is, ultimately really what the shareholders are looking for you to protect and promote, they also need liquidity. And liquidity is really important in a stock. And so marketing and depth of relationships with the investor base is really important too. So those are aspects of the role of a director on an investment trust that take up a lot of time as well. And we might get onto it, but on the governance side of things, ESG has also become another area of discussion, and approaches have varied across investment trusts, even across my own portfolio, very different approaches across the group. That answer your question?
That was the most brilliant exposition, and I'm so glad we're recording this because that was just so clear. One of my favorite pieces that I often revisit actually when I think about the boards that I'm involved with is a piece by McKinsey which looks at what does a best-in-class board agenda look like, and talks about where best-in-class boards differentiate themselves in terms of the way they weight their time to the different building blocks and topics. What in your experience does that look like for an investment trust? Because I guess, again, that's going to be quite different. You've touched on some of those different building blocks, but how do you sketch that out in your mind?
Yeah, that's a really interesting question. I think circumstances determine that as well. There are, I would say, sort of easy times and there are hard times. And when there are difficult things going on, whether your manager is underperforming, whether your asset class is just out of favor, whether you actually, have, for whatever reason, are finding it difficult to raise some leverage, it can really vary. I think there's sort of the macro focus, and then there's the more immediate focus as well. And so I think one of the functions of the board on investment trust is to be clear about what is important right now and what is the longer term vision. So keeping those two in sort of constant sort of dynamic tension is quite important. Building the relationship with the manager in a way that you don't go native you want to build the relationship, have really good lines of communication between the manager and the board. And that, I think, it sort of straddles both the micro and the macro kind of overview of what the board is going to be thinking about in a board meeting. The quality of the information you get from the manager is really important and should sort of continually evolve. And I always think the best relationships are one where that's, sort of readily, those sorts of discussions are readily had. How is this information? Is it what you need? Yes or no. And it's not always going to be, yes, we want more. Sometimes it's going to be, actually, that's not as relevant as it used to be. I think fundamentally, going back to building blocks, like I said, there are certain technical building blocks for investment trust governance that are really, that you just always spend time on in every meeting, whether it's cash management, particularly with ones that have private investments, very important. Again, with private market assets, like with VCTs or any private equity investment trust, valuations are really key. That's less of an issue with the public market. You're going to have issues around the reporting. Reporting is a constant in public market trusts as well as other companies, obviously. But for investment trusts, the annual report is a really significant document, not just for disclosures and transparency, but also for marketing and for redefining strategies, refocusing, and bringing them to light. So I think that's been a key focus for a lot of investment trusts as they've adapted over the last several years, really, to having to talk to distinctly different shareholder groups. Yeah, so the building, I think I'm rambling a bit about the building blocks, but it's communication with the manager underpins it all. And then technical building blocks of the things I mentioned before, the gearing, the cash management, valuations, potentially discount management. Happy to talk about discount management. That's a fact of life in investment trusts as well. But investment performance is fundamental as well. So a good analysis of that.
And do you think, are there sort of particular areas where good boards spend more time and the bad boards get bogged down, and it's on a spectrum? And I think you've always been on sort of good boards, but do you see a spectrum? Where do you see the traps?
Yes, that's really interesting. And even good boards can get into some bad habits. I do think you still need to be aware sometimes, we need to sort of relook at how we're doing that. So, and I think stepping back, one of the things I like to do is to read all the board pack, then put it aside and say to myself, what would we be talking about? What should we be talking about if we didn't have these board papers? Because you can, as a board, easily get lost in the weeds and just be guided by what's in the board pack and the papers that are, very important to guide the discussion. But sometimes you can lose the wood for the trees, I think. And so that's one thing that I think a good board does, is have some focus on what is essential at this moment for us to be looking at. And what are our choices? What actually are we choosing? And never to lose sight of the fact that you actually have choices to make and be clear about those. So I think sometimes a board can get too bogged down or too routinized around slavishly, just going through the governance, hurdles that you need to go through, talking about the same sort of information that you look at from meeting to meeting. And I think the better way to operate is to think about what's really important right now and how does that align with the goals and the vision for the bigger strategy that you have for the trust.
One of the things you touched on there a couple of times was around strategy. And it's a topic that really interests me, as you probably picked up from some of the past podcasts. And it really fascinates me in the context of an investment trust. What does an investment trust strategy look like? What is the sort of playing to win? How do you differentiate yourself? How do you create that moat? And what's the discussion, the questions that you're thinking about as an investment trust board member on strategy?
Yeah, the strategy discussion in investment trust board can really vary depending on what type of investments you're making. So, for instance, if you're investing as a VCT, your strategy ultimately is going to be something a little bit more constrained by the regulations that you have around you. If you're a, public markets, like big cap equity fund, you're going to have a lot more flexibility to shift within that. And your portfolio manager is going to have a lot of room potentially within the mandate to execute that strategy. That's the investment strategy. And that's determined by the prospectus, by the what the shareholders have signed up to. And so it's not really the board's decision at that point to vary the strategy unless it's really, really clear that it needs to change. And this does happen. There are investment trusts recently, for instance, and throughout history that have decided they need to evolve because there's the way they're investing or the assets they're investing in aren't relevant or appealing or whatever. Something has changed. And then it's the board's role either to find a new manager that can do things differently or change the strategy and get shareholder approval around that. So the board does need to keep very much aware of the actual relevance and to sit back. And I do we like to say on some of our boards, what's our raison d'etre? What are we bringing to the investing public here? Is this something that really needs to exist? And why? What is the contribution to the universe of investment opportunities? And I think you need to believe in that and understand that role that investment trust plays. And actually, that's a really helpful question to answer, because then that can guide the next side of strategy, which is the marketing and communications of that. Because if you're really clear on why you exist, then it's not so hard to tell people why they might want it in their portfolios. And it's been a fascinating period over the last several years as digital marketing has become a really core component of investment trust communication and marketing. I love the fact that that's happened because it's made it, really interesting as in some ways as a retail product. The huge rise of the direct consumer investing platforms has really changed how investment trusts need to see themselves and communicate. So I've loved being involved with that whole change and development. And we've really seen some great examples of success. A lot of us are still trying to figure out how to do it, how to get eyeballs and influence decisions and communicate what can be really opaque and slightly sometimes, somewhat arcane messages. Grab people. How do you make a infrastructure fund emotionally interesting to someone who has 100, things flashing across their screen at once? So that's been really a new development. And I think from a strategic point of view has risen to near the top of a lot of investment trusts discussions about how you do differentiate yourself.
Brilliant. I suppose the other topic closely related to that is around how you think about risk, which you also touched on. I often feel like there's a lot of misleading statements people make around risks, and a lot of people approach it in a sort of box ticking way or without defining, thinking about it in terms of weighted risks or time bound risks. How do you think about it as a sort of board member of an investment trust?
Yeah, risk is fundamental to governance, good governance. And the risk management of a director of an investment trust is quite similar probably to other operational companies in the sense that you're looking across exogenous risks to what you're doing. You're looking at the risks of the team. You're looking at the risks of regulations, financial risks, all of those things that, we look at in depth at least every audit committee meeting. And we have, I think, the key risk, of course, is investment performance, but there are so many governance issues, regulatory issues that we now have to, spend a lot of time on. Are we complying with new disclosure requirements? The reporting requirements that continue to change. And even, the whole review of accounting practices has taken a huge amount of time to digest. And and risks even specific to specific strategies. So the VCT world, for instance, is facing a potential sunset clause, which is now in consultation with the government. That's a risk. So there are sometimes very specific risks that require deliberate focus, besides the ongoing, sort of existential risks of the business.
Can you maybe talk more about how you manage that investment risk whilst walking the line between the sort of non-executive and executive roles?
Yeah, so the investment risk, that's a really good question. We look carefully at what the portfolio consists of, what the strategy, the stated strategy is, how the investments are tracking to what we say we're going to be doing. The risk there, as an investor, there are different layers of risk you take on, and from where you sit, you're looking at different risks. So an individual making an investment decision is going to have a whole universe of risks and rewards that they're going to be navigating through for them personally, whether it's an institution or a retail investor. For a board member of a trust, we have a stated objective of that trust. So our risk is whether or not the strategy is performing as well as it can against that strategy. We're not making an asset allocation decision that this is the best investment to make in the, pantheon of investments you could make. But once you're in that investment, you want your board to be aware of what good looks like. How much risk is taken on to get that return? That's a significant thing to look at. What is the volatility of the underlying assets? What is the diversification within those? What is the underlying leverage that might be being used within those assets? What is the key person risk within? All of those sorts of things are reasonable questions to test the manager with. So it's not that we're not keenly interested and closely informed of the assets that we're investing in. We take a lot of time at every board meeting understanding those, the rationale for them being in the portfolio, understanding why others might not be in the portfolio that could be, looking at peers, looking at the wider market, being alert to all the possible hazards that might relate to that type of asset that you invest in. And so we'll challenge. Contending is a really important part of what we do, asking questions. I think good questioning is key, being aware of historical patterns maybe that you've seen understanding what has worked and what hasn't in the past, and being able to draw conclusions about that.
Maybe give me an example of where, without breaking any confidences, a board has been asking questions around investment risk and has influenced or changed the direction of the investment manager?
Yeah. So just valuations were too high in one area. And we had a really engaged debate about that. The manager came back, did a really thorough analysis, a deeper dive than we would normally have looked at. We had an ad hoc, we had a sort of subcommittee, and we took a look at that collectively. And when we came back, the decision, and we had actually a really good strategy session about that, looking at what that would mean. And one of the conclusions that came out of that was not to desist from investing, but to slow the pace down. And that wasn't us saying that's what you should do. It was the board saying, hang on a minute, we're not collectively, we think this needs to be looked at. Would you mind taking some time to look at this more closely? They had to make the decision themselves, and they put a recommendation together. But that's how we ended up doing that. And that made sense to us. We didn't, there's a balance of risk of coming out of the market when you're meant to be investing in it. But slowing a pace down can be one way to deal with that. And that's the way we ended up dealing with that.
I love that. What a brilliant example. Maybe can I throw a sort of hypothetical situation at you, which, if you imagine you have a manager who stellar reputation, built up a lot of trust with you, who has started weighting too much, in your view, into the illiquid private markets. They got some sort of allocation for illiquid private markets, and you start to feel uncomfortable with that. How would you, as a board member, go about interrogating that situation?
Yeah. And it really depends on the skill of that manager in those markets. Some managers can go there with confidence and with experience, and you would support that if that was in line with the risk reward that you were looking for, and if it's what your shareholders have given you permission to do. I think if there was a worry that they were going too far, that the risk was too great, that there was reaching, into areas where there wasn't the resourcing or there wasn't the skill to do that. And I have seen this done. It is the role of the board to say, right, let's think about some guardrails. Should we put what we did in one case, for instance, was to put a number value on amount of money that could be invested before it would have to come to the board to go beyond that. It's not that we would be approving or not approving deals, but if the percentage of the portfolio was going to go over a certain amount in that, there would need to be approval from the board to go above that. So put the onus on the manager to say, okay, well, I really like this deal. I'm going to use my budget for that. It created a bit more discipline around that, but it also meant the portfolio itself wasn't creeping into territory that potentially added risk and changed the fundamental sort of quality of the portfolio.
As a board member, one of the things I try to employ a bit of is, I suppose, from my investor days, sort of scuttlebutt mentality of a fisher, of, triangulating from different angles what I'm being told through the executive narrative. What do you do as a board member of an investment trust to look through the narrative that you're being provided by the manager?
Yeah. I think that's one skill that I have learned over the last 10 years. You develop that skill, I think, with time, at least I have, and trying to hear. And actually, I think in any good conversation, or you're always trying to hear what's not being said too. So I think I try to, and trade-offs are always at play, aren't they? So in time, in informations, you're always balancing trade-offs. And so I think what I try to do is think about, okay, setting everything aside, all the stuff that they want me to think about. If I were coming to this, as an investor right now, today, what would I be worried about? What would be, first of all, an obvious question. Sometimes those aren't asked around the board table. And then also something sometimes snag, like if there's ever like a little bit of a snag when you hear something, or if it sounds a little bit too good, or there was something mentioned, I always try to read sort of the minutes or my notes from the prior board meetings, because it's quite useful to sort of say, well, what happened with that? You haven't brought that up this time. And just to, not to catch people out at all, that isn't the spirit of it. It's just to actually show respect for what they're dealing with, and to hear, to show interest and curiosity in what might be causing some discomfort, or might not be going quite as well, but maybe there wasn't a sort of bucket in the board pack for that to be flagged or highlighted. So I think it's taking time to think is probably what it is.
Are there any examples that spring to mind that you can sort of share without breaking a confidence?
I think, for instance, we were dealing with a team situation on one trust, and there had been a sort of an important part of the team, and suddenly that important part of the team wasn't being highlighted in the board pack, and the conversations about that person weren't there, and it just wasn't said, and it just felt like a gap, that was, and it wasn't that they weren't bringing it forward as an issue. And I think that was one where it could have been fairly easy to just sit back and have the board meeting, on face value of what had happened during that quarter, and, the key things of the performance and all of the other issues that we were discussing. But actually, when we raised that, opened up a really important discussion around the compensation of the manager, the relationship between the trust and the manager, the fee arrangements, and resourcing that we really needed to talk about and hadn't been put on the agenda. And so I think that's the kind of thing that you just need to be alert to. Sometimes the daily grind can be used as a deflection from some things that are a little messier behind the scenes. And so I think board members need to be just careful and listening and constructive, to help solve those because sometimes it's intimidating to bring things to the board when they're still a little bit messy and incomplete. But if it's done right, the board can be helpful and supportive, and it doesn't have to be then a fait accompli. Things can sometimes be redirected, or direction of travel can be supported and helped.
Brilliant. I love that. I can see why Helen said that was one of your superpowers of sort of picking up those little things. And speaking of superpowers, she said one of the other things that you are extraordinarily good at is the work that you do outside the boardroom. What is it that you do, and how do you think about that as a sort of board member?
Okay, so I think the time between meetings, and actually from moving from NED to chair, this becomes really, really important, is vital, because that's where relationships can be strengthened, where you clear the windscreen so that at the board meeting you can just move quickly through what you need to get through. And I think using that time to not, as I said before, kind of, thinking about what's different right now than 4 months ago, when I read this board pack. What contribution do I want to make in this board meeting? And being clear about what impact you can have, where you think there needs to be attention paid. And so time is always so short at board meetings, and you really have so much to cover. And there's always, it's a very volatile market. Things change. And so you need to be laser focused on what you're going to bring, I think, to that meeting, to both for what you want to get out of it in terms of questions that you have or things you're curious about and advancing your understanding of things, but also in terms of what actual actions, what outcomes you'd like to see affected or new ideas explored. So I think that's the way I think about the time in between.
Do you have a framework for thinking about how you allocate time to different board roles, where you're sort of working through a checklist of things that you need to do for each? Or you obviously cover an extraordinary amount. How do you make sure you've covered all the bases?
I do. It's funny you asked. I do have kind of a little bit of a sort of files for each of the boards, obviously. And I do actually work through each of them and kind of think about them. My kids are now grown up, but it's a little bit the way I used to think about my kids, like, is everything all right with this one today? Is everything all right? Just kind of a hazard awareness and alert antennae out for information that relates to each. And I really, really love that. I have to say, I really enjoy the fact that as you're getting information in the world, you're going through the world, you're picking up insights or meeting people who have relevance for things on different boards. It's great in between board meetings to still be able to integrate those and keep those alive. And I think sharing ideas among board members between board meetings, if it's topical, not everyone's really time constrained, so you need to be really judicious. But yeah, I think people value those if it's targeted. I always do. I really like it when board members send things that they've seen that look relevant to our purpose, our environment. Yeah, so I do have to keep the plate spinning, and it doesn't always work. I mean, it's sometimes it's really hard, and the scheduling of things can be difficult. But I also think it keeps you sharp. I think having to keep alert across those different domains. One of the things I would say, and I feel really, 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 really lucky to have this issue, but I'm fully boarded right now. And one of the challenges of that is actually, and I think for just a comment or observation for people who are other board members, I think be careful about what boards you join, because they are long-term commitments and you want to, really commit to those fully for the long term. And that will restrict other things that you can join over time. So it really needs to be a hell yes, I think. You really want to believe in it. and love the people that you're working with too, at least most of the time.
How do you think you've changed as a board member over time? What is different about Susannah, the board member today, versus when you first started?
I feel more confident in speaking out against things that I don't agree with now. I've always been comfortable with challenge and I've never shied away from it, but I think I feel probably more targeted with it now. I know where there's leverage when something needs to, when I really, really need to dig my heels in and be clear and consistent with some message. And I've worked with an executive coach on that. Actually, I found that really helpful. And I heard one of your prior podcasters talking about the assertiveness, empathy spectrum, and I think I'm a natural collaborator. Sometimes, in some situations, even on a board, I think competing is a useful mode if you really care about something. Not to say that boards shouldn't be consensus driven. I think they should be. And I don't think you should ever be thinking about winning over one of your board members. And that's one of the things I love about board work is it's one of the most unusual environments where it's so flat. You're all working together for the same purpose and you have to equally respect each other. And I think that's just such a fantastic environment to get to work in. But within that, being able to know when you're going to die on the hill for something, or even if it's not even, that's too dramatic, really. What I found, it's more like being the squeaky wheel. And there's certain issues where I know on some boards, it's been like, oh, here she goes again. Okay, there's that issue. But if you think it's really important, I think it is, your role to keep raising it if it's relevant and if it's important. So a good example of that, I think I was a bit of a squeaky wheel about a lack of marketing strategy in one board. And finally, they've really gotten the bit between their teeth. And we have had an incredibly successful and satisfying sort of experiment, if you will. I don't think everyone thought we didn't want to fund it fully. So we funded it partially. We sort of took a few steps towards doing it the way I thought we would make sense. And it wasn't me defining the strategy. It was definitely me just saying, let's imagine what we could do. Let's look around and try some new things. And then over to the manager to come up with what that strategy was, but with a lot of support from me. And I'm so thrilled with how that's gone. And I think everybody is too.
Brilliant. I guess just one more question on that sort of topic of what's been the worst sort of mistake you've made as a board member? Have there been times where you've looked back and just gone, oh my gosh, I really got that wrong? And what have you learned from that?
Yeah, definitely. So I had the privilege of chairing the Schroder's Big Society Capital Social Impact Trust since IPO. So we IPO'd almost 2 years ago. I can't believe it. It's been a fantastic couple of years. But I think as I've learned to be a chair on that trust, one of the things I learned is not micromanaging. Definitely, I was so concerned about it succeeding. I wanted it to succeed so much, and I knew that it could, and I believed so much in the people, but I really felt very personally invested in it. And so I look back and I think, I think I just was too interested in the detail, to be honest, at the beginning, and needed to let people, both at the manager and on the board, actually play their roles, which they play beautifully and are incredibly skilled at. And so stepping back and letting people really do what they can do best, that's been a huge learning for me. I'm still learning that.
That's a great insight. And I'm curious, there's one other thing that you flagged where you mentioned you do this counsellor training and working with young people. I'm really curious to hear more about that and how you think about that versus doing trustee roles.
Yes, right. Love to talk about that. I, a couple of years ago, thought I'd like to do some volunteering. And so, of course, looked at becoming a board member for a charity or something like that, and just decided that I spend so much of my life doing boards that actually I wanted to do something a little bit closer to the coalface. And I've always been interested in sort of psychology and personal relationships and patterns of relating. And so I decided to take a counseling class, and I trained in what's called the person-centered approach and founded on Carl Rogers' thinking. He was a humanist psychologist of the last century. Really interesting and very profound change to how people thought about therapy. And it has some read acrosses for board work as well. It's very much based in trying to understand the other person's frame of reference, to understand where people are coming from, and very active listening and reflecting. So I've really enjoyed and benefited from, I think it's a lifelong pursuit of trying to learn that. But I think the board members that I've learned so much from and have so enjoyed working with are people that really do take the time to understand the bigger picture and how other people are coming to situation. My uncle is a professor of communication. I respect him a lot. And he always says, what you see depends on where you're sitting. And the counseling training has really helped me do that. And now I spend one morning a week during term time in a local secondary school counseling young people. And I think there's just a massive demand for support for the mental health of people across age groups, actually. I particularly wanted to work with young people because when you're doing a lot of board work, we do end up working with older people. And my kids are now grown. And so I really love the energy and insight that you get from working with young people. And I think that can actually give you a wider view of what's happening in markets. Ultimately, markets are driven by consumers and young people drive that. So I'm interested in that, and I love working with them. So it's slightly different than being on a board as a trustee, but I found it's very personally rewarding and a nice break from the sort of governance and, sometimes more adult work around a board table.
Amazing. Susannah, I could keep talking to you for hours, but sadly the time is drawn to a close and it's time to move into the 5-question quickfire where I say a short statement and ask you for a short response, if that's all right.
Yep, I'm ready.
Brilliant. So first up is the best book that every board member should read and why?
So many great books out there. The one that it's so hard for me to choose, but the one I have chosen is Essentialism by Greg McKeown. I found it really
book
to remind myself of the highest way you can contribute in a situation. It's a great book about life as well as work, and it's an easy read, and the audiobook is also really good.
Your favorite quote and why?
I like the quote, and I don't know who said it, if anyone did, but it's just do hard things. I think do hard things is a bit of a mantra that makes life more interesting, keeps, I actually think some of the mental health issues we have around the country might be eased if people did harder things sometimes. I think, even if you fail at them, you're going to have a great story. And I keep reminding, maybe that's come to mind because I'm running the London Marathon in a couple of weeks. So I'm trying to tell myself there's some benefit in having voluntarily decided to do that. But do hard things.
I love that. I've never managed to convince myself to do a marathon because I was sort of always struck by the original, obviously, runner from marathon died, and I thought that can't be a smart thing to do. That's just never going to be for me. So you have my admiration for.
No, it's the only thing I can do. It's putting one foot in front of the other, and doesn't take a lot of skill. So it's just I'm doing it for Scope, and I think it's a wonderful charity. So I'm really happy to raise some money for them.
Brilliant. Oh, that sounds fantastic. Your best ever holiday and why?
I had an amazing holiday recently with my brother, took a sabbatical, and we went cycling in the Dordogne for a week and went to see the prehistoric cave paintings in Lascaux and in Les Isets, and absolutely breathtaking and fascinating and beautiful part of the world, and just the history is absolutely absorbing and mind-blowing.
God, what a lovely way to spend quality time with family as well.
Yeah.
Your most significant professional insight?
So I think it's that everything is a trade-off. I think being really clear on what you're not doing when you are doing something in your personal life or on a board really helps galvanize support for what you are doing, makes it clearer. And you can't do everything. So you got to choose, and owning those choices and being clear about the trade-offs, I think, makes better products, makes better boards. And generally it's hard, but it is also something that helps you achieve what you want to achieve more reliably.
And last but not least, your favorite app?
Podcasts, of course. I'm addicted to podcasts. I love podcasts, but that's a bit cheeky. So I also love Strava. It's been a great app for me as I've been training, and I like connecting with people who are doing outdoors things, seeing what people are doing, hiking or running or swimming. It's really fun and inspiring, nice way to stay in touch with people around the world and get some ideas and inspiration.
Amazing. Susannah, thank you so much. This has been an absolutely fantastic conversation. Loved listening to you. I can see why Helen said every boardroom member needs a Susannah. You've got a wonderful way of asking questions and thinking about things. So I really appreciate you taking the time and sharing that with us.
Oh, well, it's an absolute pleasure. I genuinely could carry on chatting with you too, Oli. You're a fantastic interviewer, and I love what you're doing with this podcast. So I feel really privileged and humbled to be part of it. Thank you.